Hi, and welcome to my third video in the series of review and hints for the Zoom simulation for MBA 512 in the summer 2022. And what I'm trying to do here is, in the first three videos here, along with presenting the results of the simulation, I'm giving you step-by-step instructions on how to do well in the simulation. And this year three is concluded a couple days ago, and Exotic Wheels took number one in points this week with 583 points. Now, if we look at the cumulative points, which is what your grade is based off of, I'll just scroll down here and we'll get the, did I pass it? I passed it. Total points. Okay, so total points, we have two teams here very close to 2,000 after three rounds. We have three more rounds, so they're clearly more than halfway there. And we have, remember, we're trying to do about 410 points a round, so you should be somewhere around 1,250 points. So we have, most teams are on track to get the maximum grade of the class. We have two teams that are a little bit behind, but they certainly have enough points to easily pass the finish line, giving a racing car term, by the end of the next three rounds to get the full points for the simulation. Now, I'll go back to the leaderboard in a minute. Let me show you what I would have done in round three. And you can kind of use this. I'm not going to do round four because that's what you're working on this week, so I don't want to show you what, because most people would then just copy me. But this is what I would have done for round three, which you already completed. But the exercise is important because a lot of these hints and tools will be helpful when you move forward into your round four. So of course, you want to start out with the R review and see where you did well. I did well increasing my revenues. I did well with managing my debt. My profit margins went up. Here they went up 8%, 10%, and 10%, which is a total, let's see, 3 percentage points, 3 percentage points, and 4 percentage points. The equity multiplier, looking at equity and return on assets, was actually, return on assets was not bad. Earnings per share was up 68%. Return on equity was flat. Such as it was the return on investment, because I invested a lot of money in assets. So my total asset turnover and my return on the equity was a little bit lower because of the assets were built up and the equity was built up. But that's okay, because that's just sometimes when you're building a company and you're moving the company forward, you can't do well in every financial area every year. Sometimes there's a give and a take. Okay, my capitalization went up 100%, meaning that my market cap doubled. And that's the stock price times the outstanding shares. So investors are finding my company valuable. My book value went up because this just means my equity went up. So when your equity increases, it's harder and harder to have a larger return on your equity because we have a bigger equity number now. And my forecasting was not as accurate. No, actually, it was a little bit better accurate. So I had 11% better, 10 and 21% better. So I was more accurate with my forecasting. And I increased my operational investments, which gave me 100 points, which is the max points, and I had a cash surplus. So I thought my cash surplus would be larger. This just tells me under production, I must have some unsold vehicles, which I do. Again, my aggressive forecasting, I have some unsold vehicles. So that's why my deficit's not as big as I thought it would be. My surplus isn't as big as I thought it would be. So let's go. Next, you should go into the assessment, review your personalized assessment, and get more details on each of the categories. Review your charts, specifically your performance charts. And the really important one, I think, is at the bottom, where you look at the blue bar is your potential, and the yellow bar is your sales. So I pretty much met all my sales potential. Perhaps I overbuilt some cars, but at least I didn't let any demand go unfulfilled. And I think that's important for a lot of companies. So once you're done reviewing your charts, you can go to the industry. So if you're not number one in the industry, look at the other companies. This is when Ford's doing poorly, it goes to look at GM's financial results and the products they're selling and the cars they're making and their advertising. So these companies can learn from each other. So go in and learn from other students in the class, see how How did they design their vehicles? What were their market potential? What was their financial results? And so you start getting some ideas. How much have they invested in operational cost reductions? You know, then you can review your financials, and then you start over again in sales. So I'm going a little fast because this is the third time I'm doing this. The fourth time if you count the introductory video of the sim on how to play the sim. And again, in the sales, very critical area, expectations have gone up. Consumers are always expecting more. The importance factors stay the same. So I'm trying to, from last year's decisions to this year's decisions, I'm trying to give the customers more because they're expecting more. Now, since I made so many operational cost reductions, I increased my operational cost reductions from 900 to 3,000. And that enabled me on at least the economy class, move my gross profit margin up from 49 to 56. So that's like a 7% move up, 7 percentage points move up on the gross profits, which is double what I'm hoping to do. I'm hoping to do at least somewhere between 3 and 5. So now the forecast. So some companies are forecasting very well. Other companies are forecasting, and I don't know why they're reducing their forecast. It just tells me these students are not reading the user manual or watching my videos. If you go to the user manual, and I do this every video, and the user manual is only, 10 pages, something you can easily handle. It shows me right here that there's a growth rate in every vehicle. So your forecast should never go down. And if I look at year 3, I'm looking at 3, 4, 4, 3, 2, 5, and 3. So I'm going to go back and I see that there is a little bit more. I think my cars are doing better, so I'm going to forecast a little bit higher. I think I'm going to do better than the average. Oops, that's the very bottom. Let's go back to the top. 3,500. And then sedan. Here, they're saying 40. I'm going to keep my sedan at 4,000. It's priced a little bit high, so I'm going to give up some sales. I'm going to forecast lower because I'm going to try and sell fewer cars at a higher price. Truck is at $25.92, so I'm going to put this at just 25. I don't think my trucks are that competitive either, so I'm going to reduce the forecast there. And if I'm looking at luxury, I'm going to go with 3,000 and forecast a little bit more aggressively on the luxury. Now, if you look at, we talked about the profitability in the economy class. My profitability only went up 3 percentage points on the sedan. Was a little tough because consumers were expecting a lot more, but I did manage to make the car better with a higher profit margin, and that's the name of the game. I want to increase my characteristics to better meet the customer's expectations, focusing more on what customers are, their buying criteria is most focused on. And then I'm selling it at a little bit higher price than maybe some of the competitors, but I'm adjusting my forecast to compensate for that fact that my cars are a little pricey. Here, investors don't really care, not investors, customers don't really care about price. They don't want a cheap luxury car, so I'm going to get high end of a price in the luxury car. And I'm struggling here. I only got 1.75 percentage points of gross profit better, but I didn't really build a car that was a lot better than the previous year. So I'm going to have to focus on some more operational investments. So I complete my sales and then move into marketing. And I've pre-filled some of this out to make it a little bit quicker. And again, the marketing, you need to go to the user guide, read over the marketing section, see for each vehicle what area is most effective in as far as percentage of sales. So 55% of my sales are coming from my TV advertising and 25% from my internet advertising. So I'm going to break that down. I want to spend more money on TV and internet to drive more business towards my car. So if you see here, internet is 600, television is 700. So I'm putting most of the money in advertising the areas where people are going to see the ads. And you do that for every vehicle, and hopefully you're somewhere between this range, expected range of what companies are going to spend. If you spend below this range, you're going to lose a lot of customers. If you spend too much above this range, you might be wasting money and just oversaturating the advertising field with your message. It's sort of like, ever watch a show an ad-supported show and it's the same commercial 6 times while you're watching the show, well, it's not going to make you buy the product anymore seeing the commercial 6 times as rather than seeing it twice. So that's the idea. You don't want to waste money advertising a lot more than customers need to see the advertisements. Okay, moving into production again, and here it's very simple. I only can make 3,000 cars, and I need to build more than that. So I'm going to have to buy one production plant. I don't want to buy two because I don't want to have a production plant sitting out there doing nothing. So I'm going to be very tight with try to match up my production needs with how many production plants I have. And again, I'm going to increase my operational investments because I'm struggling to increase my profit margins, and I want to make cars that are better and more profitable. And the only way you can do that is by investing in your company. So investing in your company helps you to build better cars with less materials, less labor, more technology, more efficiency, and that's how these car companies have been making cars, that give us so much more. Just look at any car from the 1970s compared to it today, and the same model. Look at the Honda 1977 and the Honda 2022, and you'll see it's the same model, but you're getting so much more of a car today, more safety features, more fuel economy, a bigger car, more technology. It's just amazing. But they do that by making operational investments. So it's always a good strategy to reinvest your profits into your company to keep it competitive. Otherwise, you fall behind, and people will know just your product is not as good, and the materials, and it's just not, it's old-fashioned, it's out of date, you don't have the right instrumentation in the dashboard. It's not, who wants a non-digital dashboard anymore? Everything's got to be digital. I took an Uber, and I was in a Uber, and it was a Tesla, and it was amazing. The size of the computer screen looked like an iPad Pro in the car, and it showed all the cars around you, behind you, people on the road. It was amazing, and that's what customers are expecting, more amazing. So if you're giving them the same thing, you're not making your car better, customers are going to move on. Okay, and I'm always trying to match what my production is here, and I have enough production. I had to buy one production plant here, and then I'll move this up. And I'm not afraid to spend money if I'm investing in my company. It's like spending money investing in your house and fixing your house up. You don't want to live in an unmaintained residence. You want to put money into it. Okay, so we're in the finance page. Go to the very bottom. I have only a $17 million surplus, which is enough. So I'm going to stick with that. I will spend a little bit of money to pay off some of my debts. It's too much. Okay, so I'm going to pay off some of my debts, and I'll buy back a little stock. Now, when I do that, if I buy back stock, my earnings per share goes up, and all my per share variables go up because I'm buying back stock, but it's getting expensive because my stock price is moving up. So now I spent $6 million, and I have an $11 million surplus. I always say you should have at least $10 million. It's sort of a risk. If you have a $20 million surplus, it will be more of a guarantee that you're not going to have a deficit. So I'm going to take a gamble, and hopefully I can sell all my forecasted cars and I don't wind up with an unexpected deficit. So when I go complete the round and the practice round here, let's see what my results are. And hopefully this will give you some insight to your results. So now I'm caught up with the team competition. You guys are in year 4. And now my practice game's in year 4. And you can keep using your practice game to test your ideas. You can rerun it and keep practicing before you go live with your ideas. Put it in that practice environment and see how you do. Okay. All right, so I thought I was going to have $11 million surplus. I only had a $10 million surplus. But because I kept $11 million surplus, I didn't wind up having a deficit. So I didn't lose those points, and I came in right on target. Remember I said we're trying to earn about 420 points a round. So I got my target points in, and we look here, we see what happened. I was able to increase my revenues by 30%. And I was able to improve my debt ratios because I bought back some debt. My profit margins went from 55 to 59. And remember, every round I'm trying to go somewhere between 2 and 5% higher on my gross profits. And that translated into my operation and my net. They weren't as good because I did spend I was a little bit more aggressive on my advertising so I could try to sell more of the cars I'm forecasting. And because I bought a lot of assets, my total asset turnover was a negative 14 points because I grew the assets faster than I grew the sales. And that's going to be part of the reason the return on assets are lower, because my asset base has gotten so big, my profits didn't grow as fast as my assets. This is very common for a startup business that's growing their business, buying assets. And we should see over rounds 5 and 6 that this trend will reduce a little bit as our profits and sales are going to grow faster than our assets because we'll have a lot of our assets in place. Okay. Now my market capitalization went up 75%. My forecasting was more accurate except for the economy and a little bit on the luxury. I doubled my operational investments, so I had made 100 points there, and I had a surplus and made 100 points there. So I got 429. So that's pretty good after 3 rounds. Let's see where I am on my total points. So my total points after 3 is 1,700. So that's great. I'm right on target to get the, I think it's 2,400 points I need for that A in the course. Okay, so let's go. Now that I've given you the same hints, I keep giving the same hints and tips and covering the basic problems some teams are having over and over again. So it tells me that, watching these videos is working. A lot of teams are improving and they're moving up in their statistics and they're doing better. So watching the videos, they're only 10 to 20 minute long videos, but they help. This is the last round. I'm really going to do the hint part, and then moving forward, I'm just going to go review the results of the rounds because it's nothing new for me to say. I've said everything 3 or 4 times. I just hope that you've caught some of what I'm saying at least once. If we go back here, this is the leaderboard, and most teams have gotten close to those 400 points that I was saying you should get. And now that you're moving into the 4th round, every team should try to be in the 50 percentile or higher in gross profits. Some teams are going to be reaching 60% or higher moving forward. Stock prices will continue to increase as long as you're increasing your profits and your profit margins. That's what investors want, and that will push up your stock price because it's going to help push up your earnings per share. The return on equity is going to be slowly creeping up as you increase your profit margins, but if your equity grows faster than your profit margins, you might see a little change over here. So it's not a category you're going to make a lot of points in. You're just trying to build equity. And again, the total points, if you're above, I would say if you're above we did 3 rounds, so 400, we'll say, 415 times 3. If you're above 1,250 points, which all but one team is, you're right on track to get an A in this project. So let's look at the charts here, the industry charts. And we see that for net profits, total net profits, we've moved up from, under 100,000, around 70,000 for the top teams. And now we have a number of teams here, Fox, Power, Ghost, Caros, Cars, all breaking, Farah Corp, all breaking 100 million in net profits. And most teams here we see a doubling or greatly increasing the profits, doing very well. If we look at points per team, okay, of course, round 1 is easy to make points because you replaced the terrible management that made a lot of bad decisions. So of course you're going to shine brightly in round 1, but now round 2 and 3, you're competing against your last round's results plus all the excellent players in the simulation. So it's going to be, harder, almost impossible to get 1,000 points per round, but you could still easily make those 400 points. And we do occasionally have a team where you may have underperformed the previous round, but since it's year-over-year comparisons, you can easily get many of those lost points back by just making the right decisions the following round. Okay. We see stock price, we have the same leader. Ghost is still the leader in stock price. And we have, couple teams here over close to 280 million in sales. We had some teams, if you look at this team here, they must have watched the video and helped figure out how to forecast better and plot their sales, and they had a huge, a good incline here. A percentage increase is incredible in their sales. So everybody's increased sales. Some teams are just learning. This team right here, Exotic Wheels, that's why they had so many points. Look at they went from 249 million to 371 million in sales. Probably the steepest incline here. Moving down, so we have one team here that needs to really focus on they're not getting the forecasting part. Read the student user guide. It lays out the forecast very well, and I think it'll help you get back with everybody else. And again, Ghost Motors #1 in earnings per share. So that's your overall graphics of the team. So take some time to review that. And remember, now that you're in round 4, like this is my practice team, I'm in round 4, I doubled my cost reductions. So I had 56% gross profits last time. So now I can make a better car. So I'm going to make a better car here. Moving everything up. Including the price, because investors will pay more for a better car. And I was able to move it almost, 11 percentage points in that gross profit. I have enough gross profit where I could, in some categories that matter a lot, maybe I can give some, I can provide a fuel economy that's greater than the investors are expecting, which means I could, probably sell more cars than the average forecasted amount. In the user guide, the average forecasted amount for round 4 is 42. But if I want to, as a strategy, if I want to make a car that in areas that matter a great deal, if I want to bump up some of these areas, I can still get a 6% or 5% gross profit increase. But now maybe instead of thinking I can sell 4,200, maybe I'll take a chance and I'll try and sell 5,000, higher than the average, because I'm making a better car, because I have the wiggle room, because I've invested heavily in the company to get to that point. Now, I wouldn't say you should copy this, because I have a different, this is the practice game. You have your own strategy going in the team competition. So use what I'm saying as a baseline to help develop your strategy more, learn from your mistakes, learn from your teammates, play more practice rounds, and let's really kick up those points in year 4 for the team competition. Okay, thank you for watching this video. I hope you found it helpful, and good luck. Next round.